so hard to get attention today from people, from consumers. It's so hard. And if you're not quick to get their attention, you're not quick to qualify them, get rid of the bad people, the good people go, okay, this is for me. Quick to give them a call to action, hit them emotionally, and then hit them, what it looks like after. You just won't compete today.
Welcome to Broadcast Your Authority. I'm your host, Danielle Thompson, and I'm here with a special guest, Anthony Sarandrea. He's a fractional CMO, and he also is a founder of Pocket Your Dollars, which sold for $70 million to Media Alpha. Welcome. We're so excited to have you here.
Thanks so much for having me, ladies. This is awesome.
Yeah.
An incredible feat. I was like, you just come in, you're like, man, he sold this for this. But obviously there's a journey and story behind that too. We were talking a little bit off camera before this, but can you share with us how you started that company before exiting?
Yeah, totally. Yeah, super blessed on a number of things, timing and just so many things out of my control that worked in our favor. But I was going door to door selling solar hot water systems, which was fun. And I saw a guy playing basketball. I know you have a basketball background.
Yeah. I was like, that's my guy right there.
Middle of I think a Tuesday or Wednesday, middle of the day. And I was like, what do you do that you can play basketball at 11 a.m.? He said, I worked on the internet. I didn't know what that meant, but I knew I wanted to play basketball middle of the day. So I begged him for a job. Turns out he was one of the first 10 employees of GoDaddy.
Oh, okay.
And so I got to learn underneath him. I got to watch his company go from a couple million in revenue to $235 million in annual revenue over the course of like 2 years. Like it would just went nuts.
It's an incredible feeder, like kind of a mentorship path to watch too.
Unbelievable. How old was I at that point? 19-year-old kid. 19, 20. And, my father's a retired police officer, got hurt on the job in New York. My mom worked in my elementary school. And so I remember the first day I showed up, I was like, there's something illegal going on here because I'm seeing $100,000 a day Google AdWords budgets, things like that.
Like, what are they doing behind the scenes?
Isn't that wild? And so I just got, tremendous education. And I guess that was, first lesson my dad, I don't know whether he did it purposely or not, but believed being the smallest person in the room was a huge advantage and just getting us in the right room. And
I think it's really about being in the right room.
That's exactly right. And
we've learned it now over the years too, but I think that's where we need to be.
Totally. Super blessed. He made the investments for us to go to private school that we did to have those connections and go to a private gym to be able to have those connections and things that I know when I look back were far outside of their budgets, for lack of better words. So I'll forever be grateful for them putting me in that opportunity. But then just hired. So basically, learn what I could from there. Started. I thought it was a nice side hustle. Got a W-2 job, and then had some clients on the side that was like so fun. Everybody works remote now, but to be able to work remote was like the coolest thing ever. To work at 10 o'clock at night till 2 a.m. And charge $15 an hour. I thought I was on top of the world, and I was. Long story short, I got busy enough with that side work that I was doing at midday during my W-2 job, which I got fired from because I wasn't working on it. And I think they had built up enough to pay my rent and food and all this stuff. And that business it was funny. It was an internet marketing agency. And, fast forward a little bit faster. I didn't spend $1 on marketing. It was all through referral based and over servicing the clients. And,
that's incredible.
Yeah. I said I was going to do 10 things, I did 11 or, as a silly example. And, we grew really fast, got a bunch of referrals to where I was filled up. Then I had my brother come work for me for free until could pay him. And then he got filled up, and then other best friend, brother. And then started running out of friends and family.
Family side business.
Exactly. Running out of friends and family. And we scaled that up to close to 7 figures in EBITDA. It's close to $1 million in profit, which was so much fun, especially in my early 20s. It was just so blessed. And I got we were jamming a little bit before this, such a breadth of the world from all these different industries because we were just taking on anybody and everyone as a client that we could.
Yeah.
Just to, you've got money? Cool. Come on, we can help you. Yeah. So whatever service, whatever place. Yeah. But it was cool. I got to learn so much at such a young age of the world, all different spaces and industries to play in. And then, essentially I made a pivot. We one day wrote what I thought was a great sales script. And it was all the internet marketing agencies were charging 1% of your ad spend. So if you spent
oh yeah, that's right,
$10,000 on Google or on Facebook, it's 10%, 20%, whatever it was. And I realized a differentiator would be in my pricing model. So I would come in, instead of saying 1% of ad spend, I would throw rocks at that. And I would say, which I believe too, is they're incentivized to spend more money, not to spend it more efficiently for you. Pay me $2,000, which is the same amount they were making. Pay me the same amount on a flat fee. I'll want to spend less of your money on ad spend, but produce more. And I'll take a profit share. Give me a 10% profit share of what I generate. And I remember my team being like, well, how are you going to ever track that? And I was like, we're not. It's an awesome sales script. There's alignment and companies are going to love it. And I'm never going to be able to track it. I don't know. I remember going to my mailbox and I should really look up what the number is. Every podcast I changed what the number was, but it was in the like high teens, low 20s. I remember going to my mailbox. I had like a whatever $19,000, $20,000 check. Mm-hmm. And I remember calling up the customer and saying, hey, your controller messed up. And he goes, no, man, that's your commission from last quarter. And I was like, really hooked on this stuff. That's awesome. So we essentially productized the service from there. So we niched down. We niched into specific industries. And we only started charging when the phone rang. So lead generation, when you got a form fill or a phone call, ultimately for me, it was generating a consumer-initiated inbound call. So you see one of my ads on paid social media, come to a landing page, and then you dial yourself, you'd call in, and then you get routed to somewhere. And I'd get paid every time that the phone rang for the customer. And I wore a lot more risk because I was paying the ad spend. It was my website, but nobody cared who I was. They just cared about the economics. They knew that they needed, they could afford $1,000 cost per acquisition. And I charge $100 a call as an example. And if 1 out of 10 of those close, they said, send me more. Less than that, they said, I got to pay you less or I got to stop buying from you. So super transactional. So long story short, scaled that up. It was a lead generation business, scaled that over a 5-year period of doing, 1 million inbound customers a year. We were doing $10 million in EBITDA, net cash flow profit, and then took it to market in 2021.
How did you go through the process of like when you actually exit a company? Like, is it because, somebody came to you?
Sure.
Like, how does that process come through? Because a lot of people are always, I know our audience, a lot of people are always asking, like, how do you scale to exit?
Yeah.
How do people actually find the company? How do you come to the evaluation? Totally. Things like that.
I know you hear the like Cinderella story. Somebody knocked on my door. I didn't want it, but I took it. Right? It's The reality is, we hired an investment banker, which is really a commission-only salesperson. Again, that says, "Oh, we'll go market your business and give us 2.5% of the sale price." So, what's great about that is that there's huge alignment to get a higher sales price. What's a really good indicator if you have a sellable business is, 2 out of the 3 investment bankers I talked to said, I don't want to do your business, right? Because they didn't think it would sell. One guy said, it's a lifestyle business, it'll never sell. Okay. Next one said, you're growing too fast, don't sell yet, which was really a nice way of saying, like, I don't think this thing's going to sell. And then the third one said, and again, these are 3 of the reputable ones, not anyone off the street. I'm sure I could have got anybody to say yes on smaller ones. And then the third really high level prestigious one was like, yeah, we'll take it to market. And I was like, found my investment banker. So that's cool. I really thought I was getting a free education the entire time. I did not think the business would sell. I knew it was great cash flow. I knew we had built something tremendous, but I never looked at it as a sellable asset. I never even thought about that. And ultimately, until the money was wired into my account, I was like, holy cow, this is real. But yeah, until then, it really felt like a free education.
What did it feel like that moment that it went through? Like, were you just like sitting there like, this is real? Yeah. Like, what was that feeling like?
It was funny on a couple different levels. One is, I'm really proud of myself because it didn't change anything in my life from a financial standpoint. I didn't go out and buy a new house. I didn't go out and buy a new car. In fact, I took, like when people fast, right? It's a practice of letting go of your ego. It's a spiritual practice.
Stay humble through the process.
Yeah, exactly. And being able to be dedicated. I went through that in my finances. I was like, I have an ability to now have financial wealth, but what if I went the other way and I fasted? And, so my wife and I did is we actually cut our expenses in half when the sale of the business happened.
That's amazing.
Thank you. And it was really out of that spiritual practice just to say, okay, can do this, but, want to see if we can exercise this muscle. And I'm really proud of, her and myself to be able to go through that practice. But the more fun part of that story is I'm in New Orleans for the Final Four for my brother's bachelor party. And it's Coach K's last game. Where the morning of I wake up and I journal through the whole story for myself, just to keep notes on what's going on, to stay relevant. And then I get on and it's this moment that there's 5 people on Zoom and you go, okay, do you agree? Yes. They're like, all right, I'll be there soon. And I hang up and I'm like, that was weird. I don't know what I was expecting, but it was like a yes, hang up. And then money hit my account or hit the business account, which is fun. But I'm like, okay, so I have a controller and a minority business partner. And, your head starts going. So you're like, okay, it's really safe when it's in your bank account. So I'm like, great, we banked with Bank of America, bank with Chase. I'm like, cool, I'll go transfer it. Well, there's no Bank of Americas in Louisiana. I had no idea.
That's true.
So now I had to wait the whole weekend to actually go do the transfer. So anyway, it was anyway, anecdotal, but yeah, it was a really special moment, really fun.
I love the fact that you're spiritual as well, kind of bringing that into like your soul journey on that side as well. And you're saying that like we're talking about offline with like the gyms and all that stuff. Like, love all that stuff. I think it's really important to. I know that as we've grown our company together, like we've tapped into more of like our spiritual journey, like intuition and knowing what feels right. Of course, we're working smart, working hard in different areas, and just like trying to figure out next steps for different things. So now you're focusing more on like the fractional CMO roles with companies right now. What do you see like that you've kind of come in through the ones that you're currently working with? Like, what is kind of the common theme with the companies that you're helping right now? Like what they're struggling with? I know you have a background with lead generation, things like that.
It's usually on the sales or marketing side of things. So they're spending 6 figures plus a month, and they're not getting a return on ad spend they're looking for, and everybody thinks it's it might be within your Facebook account as an example. Well, a lot of it happens post-click as well too, where there's things to optimize. So conversion rate optimization, which you're familiar with, the sales process, and being intelligent around lead distribution and these other things if it's not an e-commerce brand and stuff like that. But I find to answer your question, the common thread is there's been a tremendous amount of businesses built off of a very wobbly table, and like huge businesses. There's two, I won't name names right now, that I would like that do over $100 million a year in revenue, totally off Meta, off of Facebook. And it's like on one side, it's like, that's so cool. On the other side, that's scary. What happens if Meta goes down, your CPAs rise, things like that. So a huge effort that I think a lot of brands ignore is the diversification, where you're actually getting traffic, because when things are good, they're good. But holy cow, if one day that goes down, like you got a real problem. So I would say brands ignoring their diversification is a huge trend I've seen. I'd say another huge trend I've seen is, and this is funny, this is a guy who ran an agency, getting comfortable outsourcing stuff through an agency. And, my younger self would take me in the head for what I'm about to say, but I do believe it, is a lot of these brands need to be building it in-house. Attention beats
totally.
Experience on paper, and at a lot of stages of these businesses, because I ran an agency, the squeaky wheel gets the grease, it's a puppy mill. It's churn and burn. They got to get the next customer in. You got someone good on the account, but then they get shifted to another one. You don't even realize it. So all these things, that having someone in-house that can live, sleep, eat, and breathe your brand is tremendous.
What would you say? So we're an agency, obviously.
Yeah.
So our whole team's remote. So we never had the cost of overhead or anything.
Sure.
A lot of people actually came to us during COVID. So we actually launched our agency model just about not even 6 months before COVID hit. So we've never, our side, we've never really had that, like, I guess, in-house, even though we communicate with the team all the time. We feel like it's in-house, even though there's contractors, teams, and some of these contractors and team are worked with us for like 5 years now. And since we started, and so it's interesting to put that, like, you're like, we want the in-house. What do you see with something like what we're doing?
Yeah, I would,
like, in different sense, I guess, if it's like a remote team, do you feel like we can still, reach even higher heights on that side?
And in-house doesn't necessarily mean in person.
Got it. Okay.
In-house just means somebody who's spending
teams that are really connected.
Yeah, spending 20 to 40 hours a week on just you. Ideally, it's 40 plus. But when you've got, someone or a point of contact who's the one, a lot of these agencies are presenting, they're not the ones doing the work. So this guy's really just a good salesperson talking to you.
Got it.
There's a great book, How to Lie with Statistics.
Like I've talked to some agencies before, so they have like the salesperson that's also part of the team, so they feel connected.
Yeah, so but really there's someone else running the account in the back. And I want to know who's running my account. I want to talk to them. And just to finish that thought, there's a great book called How to Lie with Statistics. And it's a great book for us to be aware of, like, you can manipulate any statistic to make it look good. So it's like, and these people are experts at that. And
I know with our roles, and so we've got our project floor managers, which they're the main communicators, and they communicate and delegate to the rest of the creatives, right? So they know who works on their account as a project management standpoint. So they're like their go-to conversationalist, right? So a lot of the creatives, they don't want to be like, they just, that's like, that's how we've structured it out over time. So it's like one project manager, because there's like maybe, 6 creatives underneath, right? But they know that's their go-to person. And then sales also it's actually part of the team too. So it's like, I feel like they feel like they have contact with people.
And I think there's a role for agency. Mm-hmm. And where I don't think there's a role for it is your sales and marketing, specifically paid ads.
Right.
And your sales. I think for growing your podcast, even I used to have a fractional CFO. Like, I think there's a huge role for that, to have agency for bookkeeping, things like that. Mm-hmm. For me, and again, I'm biased, I think spending, $100,000 a month, $10,000 a month on paid ads and not being sure who's running your account. Mm-hmm. That's weird to me.
Yeah.
That's scary.
That's scary.
We have our ads guys in-house for our agents.
Amazing.
And we started actually delegating out to do some ads for the podcast for our clients, and they speak directly with him.
Oh, great. So then
they know who runs the ads.
Also, all agencies are not created equal. Like I've got to spend a little bit of time with you ladies, and when I ran my agency, I think any of my old clients would say, well, that was a great agency. I think what'll happen is you girls run such a great company, you're getting very busy very quickly. Mm-hmm. So it might be a great time right now for somebody to work with you. Mm-hmm. And I'm not necessarily saying it one in the future, but there'll be a certain time where you have hundreds of clients and you're just so far out of the weeds. And it's during those like hyper scale, like really good agencies usually go scale really quickly. And then they get really they get usually kind of crummy service from there too. Yeah. I'm not suggesting all of them do, and I'm not suggesting you will.
I think another thing is like from the media buy-in standpoint. So we were getting really great leads, hundreds, thousands of leads in, and then it started shifting to we started getting a bunch of like, no offense, like comedian leads and rappers and people that didn't really have a budget.
Yes.
And so it's like we need that creative, like that direction from a CMO. Media buyer team, our media buyer to target the right audience. Yeah, so that's what we're dealing with right now.
And I think, third one, you asked me what are some commonalities.
Yeah.
If you're talking about even e-commerce or lead generations, not all customers are created equal. Yeah. Again, too. So what the biggest fallacy is, how many leads at what price? Well, that doesn't tell me anything really. I could go run an ad saying, if you call these ladies, I'm going to give you a $100 gift card to Visa. And I'm going to get a tremendous amount of leads very cheaply. And most companies will applaud. Like, our leads are from $20 to 15 to 10.
Yeah.
When in reality, usually, the cheaper you're driving the lead, the lower quality you're delivering it. And you're getting the comedians, the rappers, versus the $10 million business.
Exactly.
Like, I don't have to tell you ladies, if someone's going to spend $100,000 with you and it costs $1,000 for a lead, and 1 out of 10 of those close, you're like, yeah,
that's exactly the direction we want to go in, because we have corporations we work with, and we actually thrive with the corporations. They pay us in full for the year, and then they are constantly renewing. So like 3, 4, 5 years. So it's like, how can we get more corporations under our belt? And we don't know that right now.
Too. We know that it's in the marketing and sales piece at this point. It's like, how do we do a shift? Because we've been working with small to medium sized businesses. Yeah. And then sometimes you got the entrepreneurs that come in that have budgets, but it's not necessarily the way to the scaling path that we're going towards, or we'd like to go towards.
Yeah, I'd say a couple of things. One is, when I first started advertising on Meta, I used to target Oprah Winfrey page likers, females that are 35 to 55. Now, these $1 trillion algorithms do a lot of the audience for you if you're pushing back the right signals. So firing a conversion on a lead might not be the right signal to optimize around, because it's basically the second they get the rapper in or the comedian, Meta goes, you're telling them you did a good job. Give me more of these. They go, okay, let's do more of these. Versus firing on somebody who might be a qualified lead. So it's a offline conversion you're passing through, or somebody who turned into revenue for you at least $10,000 of an annual contract, and you're feeding that back. And you're starting to fire the pixel on further down the funnel metrics. And that's a huge miss for companies. They usually just do the leads. Secondly, this isn't going to be rocket science, especially because you ladies are so creative. The creative. Like, I remember I had 2 different, this is when websites were very expensive. Now they want to become more commoditized, but WordPress companies. And I copy and pasted the exact same campaigns for both of these 2 companies. They both serve national. So it was literally a 1-to-1 thing here. This one started running ads that said, we only work on 6-figure websites, $100,000 websites. So their click-through rate was down, their leads were down, their leads costs were up, this one said we do WordPress websites, but guess what they were getting? A lot of the, at-home bloggers or the this or the this, the very low budget, right? They're like, hey, I just need to know how to fix my widget on my site. Same thing. This guy goes, Anthony, for every $1 we spend on Google, we make $5 in profit. This lady said we haven't closed a single deal off the advertising. What was the difference? Are we targeting the same keywords, the same geographic? Only difference was the messaging around saying who we don't work with and who we do. So a lot of times in messaging, it's not just podcasting's great and build your podcast. It's, hey, are you a business doing at least $10 million in revenue?
I love it.
Looking to diversify your traffic or looking to build out your podcast, blah, 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 something like that. That messaging, and there's a term in the algorithm where, again, click-through rate's cheaper, worse, who cares? Leads are cheaper or more expensive, who cares?
Yeah.
All I care about is I spent $1 and I made how much. And there's a lot of stops on the funnel that people get hung up on: the lead cost, the click-through rate, blah, 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 blah. Doesn't matter. This is what matters: how much I spent and how much I made. So I would call it out in the messaging, and then I would actually fire the conversion pixel to go back further down the funnel than just that. And it works for e-commerce too. A lot of times they'll fire it just on people who bought. What about the returns? What about the people that only bought once versus lifetime value?
Do you think that, so we've done Meta, Instagram ads, now doing more like Google and YouTube advertisements. Do you think there's any specific platform based on what you've seen or know about us so far, what we've done? The Facebook and Instagram ads were driving in qualified leads. We actually, when we first started it, we were actually targeting more in the healthcare wellness space on that side. And there were more of that kind of practitioners.
Amazing.
Like large med spas,
Doctors.
Amazing.
universities. On that
My business was a Medicare insurance that I sold. So and the agency was a lot of healthcare. So
and a lot of the people that we do help that actually do take off are in that space because those keywords do really well on YouTube and podcasts and things like that. But they also have practices and other offers and communities. So that was one of the demographics that we really focused on this last year and did well with. And we're still working on it, of course.
Sure.
We're like, do we just do this niche or do we continue to, because there's other niches that do well with us too, finance, some of them on the entrepreneurial side, but the ones that have a little bit more like a fluff type marketing, that it's not as feasible at times.
Yes.
We're trying to figure out, like, do we double down on Meta or do we continue this path that we've been starting to do with Google and YouTube? Yeah,
I think, so I'll give the pros and cons to all of them because the crummy but correct answer is you test them, you test it, which I know is not
diversify.
But that is the right answer. Is you test them all. But to answer generically speaking, I think everybody knows Meta's great and can scale up, and it's really quick to optimize. The algorithm's really quick to get in front of the right people.
There's one that's better for like corporations.
Yeah. I would say two things. I'd say one, Google search is great because it's bottom of funnel, right? It's somebody directionally looking maybe how to start a podcast. And then in your case, you've got to deal with the quality. So again, must be the size of business or must be spending this on marketing a month or something.
I think another one that's been doing well. So the corporations that work with us, not all of them, but some of them actually, they already have a podcast, but they haven't been able to market it effectively.
Totally. Well, then for you would call it out. Did you?
I guess different types of ads, like you're starting a podcast to grow, this way, or you're leveraging your current podcast
That's right.
On that side.
But you'd want to call it out because you're going to get a lot of the comedians and actors and stuff like that. So you want to call out, like, are you a corporation with at least 10 employees?
Do you see a certain type of creative, like static image versus reels, corporate style versus
I'll get in. Let me finish I'll do the traffic side and then I'll come back to the ads. Okay, so the traffic side. So Meta, we know Google search is great, bottom of funnel. We know that they're in market if they're searching. It's dying, obviously, because I don't know about you ladies. I use ChatGPT more than I do Google. So it's dying.
Exactly.
But it's still obviously a great directional place to be advertising. More expensive, but still you would test it to see. Remember, we just talked about the cost of the lead doesn't matter. It's just the return on ad spend, how much I spent, how much I made. YouTube, I think, is the most sleeper platform that nobody's focused on. It's owned by Google. They need to figure out how to continue to monetize YouTube better and better in order to continue to make the profits that Google's used to making. And you get to leverage search data. So you get to leverage, they get to see that you search something and now we get to target you on YouTube for that at a fraction of the price. So companies are not spending enough time on YouTube. Last one would be LinkedIn, and not their advertising platform. If you asked me 5 years ago, I would say their advertising platform has the most potential. I still feel that way today. I've been letting you, and I thought it would have been the best place to advertise today for a B2B. But scraping contacts off of there and then uploading it to an audience within Meta or one of these other platforms is particularly a really good use of LinkedIn from that standpoint. There's also tools where somebody comes to your site, they can match their IP to the address they're coming from, and they can say, okay, that we know that this business was on our site, and then they can kind of, better inform their cold calling or whatever they're doing for that. So those are the platforms. As far as the ad, this is a 10,000 foot level, but the structure is you give the benefit, so the hook. So it's something like generate another $1.7 million in profit through podcast advertising, something that grabs someone's attention. Next is the qualifier. If you're a business with at least 10 employees, spending at least $1 million a year on marketing or doing at least 10 million in revenue, whatever you deem to be a big business, or if you're going to focus on healthcare, you're in healthcare doing this. So hook, qualifier, call to action. Come get a free call, free coaching call, or come get whatever the offer is. Discovery call. Come get a discovery call. Come to the site, get a discovery call. Then this is where people miss life before. So you want someone on there, not you, ideally, a spokesperson, a UGC, user-generated content, someone saying, before I had podcasting as a part of my business, or before I hired a professional team to grow my podcast, this is how bad life was. I was spending time here. I had gone through this. I had and you really dig into the pain points that your consumers already think they have. And then the last one is life after. Now, this is how good life is. I've grown it here. I've been diversified, whatever you want to touch on. So that's generically the structure of an ad that I'd recommend. And a lot of times companies come on and they're like, hi, I'm Anthony. and you're like, dude, you're gone because you're competing so hard to get attention today from people, from consumers. It's so hard. And if you're not quick to get their attention, you're not quick to qualify them, get rid of the bad people, the good people go, okay, this is for me. Quick to give them a call to action, hit them emotionally, and then hit them, what it looks like after. You just won't compete today.
How about that?
Another thing I was thinking about, because we get approached at times for rev share.
Sure.
And I'm just so hesitant on it. We haven't put it in our company as a model yet, but do you think that that's an opportunity?
I would like a hybrid model where you're getting paid plus some upside. I think is fair. The challenges with rev share is back to my example with the two websites. Was I better or worse for either of these? No, if I had done a rev share with this lady, I would have made $0 because her sales process stunk.
Yeah, exactly.
So there's so
much ambiguity with it.
There's just so much post, in your case, lead or post sale or something. Post lead mostly is probably what you're driving for people, or e-commerce sale or things like that. Or in your case, the attribution. Someone might have seen a podcast and then went direct to the site or something like that. I would stay clear of it. Ladies.
I agree.
I like you chart managed services.
Usually people don't ask us that question. I usually just say we've got referral partners that we give back 10% to our referral partners, and we've got power partners that are complementary, publishing companies. They'll refer us, their clients are going through launching their book, and then boom, they come over to Broadcast Your Authority to go on a podcast booking tour, right? And so we built those types of partnerships or done referral fees back, to give back. But we've been approached several times for the rev share.
By the way, the business I sold was a affiliate lead generation. So I was a 100% commission-only salesperson, kind of what they're asking you here. Here's the challenges. When you're a 100% commission-only salesperson, now I'm you in this case, you're the one asking me for a rev share. I'm going to market highly aggressively because I don't care about your brand. I just care about my rev share percentage.
Right. That's true.
Aggressively. Secondly, I'm going to put effort into it. And then if this stinks, I'm just going to go on to the next one. I don't care.
Those are the relationships we like to build.
And for the client, they shouldn't want that either. I love the alignment if it was a portion of it built in, like a portion of profit share or rev share or something. But you're taking on so much risk with the rev share.
Totally.
And by the way, there's not really great alignment with that either. It'd be like, imagine everyone in your company being a commission-only person. In theory, you go, that sounds great. But think about the incentives that you set when your bookkeeper is a commission-only person, or this person's everybody's just stepping on each other's toes. They're not looking long-term. They're only looking short-term. They're going to hop very quickly. There's no compounding nature of them building your culture and your operations and your processes. So, in theory, sounds great, rev share, but in actuality, the incentives you set by doing that 100% and oftentimes don't work out. So
totally my gut feeling.
Anyway, yeah.
Cool.
Yeah.
On either side, by the way, not just for you, for the customer as well.
Oh, I could talk about this all day.
I know.
No, I love this time that we've been spent together on this. Thank you so much just for joining us and talking a little bit more. Could you share with our audience a little bit more how they can connect with you and learn about more what you're doing with like fractional CMO work?
Sure.
You have an incredible story. You're doing great things. You're inspiring people, and we're just super grateful for you.
Oh, thank you so much. Yeah, I'm super available on online, whether it's the school in my name and AnthonySarandrea.com or Instagram or altercall.com. Any of these sites are easy ways to get in contact with me. So I love what I get to do today. I get to give back from a strategic role. And be able to see, entrepreneurs that are really hungry as operators and be able to go execute on that experience share. And it's a really fruitful and purposeful time in my life right now. So I'm really enjoying it.
I like it.
Yeah. I'd love to hear from you.
Well, thank you, Anthony, for joining us. And those of you that are watching, be sure to subscribe, ring that bell, leave us a comment. Let us know what you thought about the episode, and go check out Anthony, what he's doing. And we'll see you in the next episode.